Tired of dropping your phone or struggling to prop it up? Meet the PopSockets phone grip with expanding kickstand in black, your new must-have accessory. Don't miss out. Grab yours today. Click the link in the video description to shop now on Amazon.
Welcome back to Bitcoin Bulletin. I'm your host today, and we're diving into a crucial on-chain warning that's got the market buzzing. Bitcoin's short-term holder selling has started to accelerate amidst price correction, and it's raising serious concerns about a deeper dip. Let's break down what this means for Bitcoin's future. According to CryptoQuant QuickTake, Bitcoin's short-term holders, or STH, have turned sharply negative over the past month. Despite BTC holding above $100,000, their net position has changed by BTC. Now, that might seem like a small number, but considering the April crash saw a similar net change of around BTC, this is actually a pretty significant sign. But what does it mean to be a short-term holder? Well, they're investors who have held their Bitcoin for less than 155 days. They tend to be more reactive to price volatility and market sentiment, often selling during corrections or uncertainty. So, when the STH start to sell in large numbers, it can create a ripple effect that affects the entire market. Darkfast, a CryptoQuant contributor, notes that current STH behavior closely resembles the activity observed during Bitcoin's brief drop below $80,000 in April 2025. The digital asset bottomed out at $74,508, and the STH became much more sensitive to market movement since then. But here's the thing: Bitcoin is showing signs of reversal. After losing momentum, after reaching its latest all-time high of $111,814, it regained strength over the weekend, indicating a possible turnaround may be underway. For example, seasoned crypto analyst Ali Martinez predicts that Bitcoin could rally to $108,300 or even $110,000 if current momentum continues. Another analyst, Rect Capital, notes that Bitcoin broke out of its two-week downtrend and may now be turning that former resistance into a new support level. But don't just take their word for it. Several technical indicators are pointing to continued bullish momentum. Notably, Bitcoin's hash ribbons have recently flashed a prime buying signal. And on-chain data suggests that BTC could experience a sharp upward move in the short term, potentially driven by a negative funding rate on Binance. A prolonged period of negative funding rates often sets the stage for a short squeeze, and that could be exactly what we're seeing right now. But despite the bullish outlook, there are some red flags to watch out for. Recent data shows that long-term holders are gradually exiting the market, while an influx of retail investors could add volatility to the current rally. So, where does this leave us? At press time, Bitcoin trades at $107,627, up 1.9% in the past 24 hours. It's a volatile world we're living in, but one thing is clear: only time will tell if this latest dip is indeed just a correction or something more. Thanks for tuning in to this special episode of Bitcoin Bulletin. Stay informed and stay ahead of the curve with us.